Good morning. Do you guys hear me?
Yes.
Great, great. So thank you guys so much for joining. We're going to go ahead and get started with our course here. It's called Basic Income Calculation. So basically what we end up kind of just going through today is basically how we take a look at a calculation on pay stubs. So your W-2 employees. So we'll be running through all that good stuff. And if you have any questions, you guys can ask as we go. We don't have to hold up anything on that. So let me just go ahead and change my display settings here. There we go. So we're going to go through and first discuss the pay period structures that we take a look at here. So a big common misconception that we kind of see is when some people are looking at a pay stub and not looking at the pay dates. So something big that we have noticed is a lot of the times we're either under qualifying or over qualifying a client. So a big thing to use would be a pay structure, which would be a weekly pay structure if a borrower is getting paid a week, a biweekly pay structure, which actually consists of 26 paychecks, or a semi-monthly pay structure, which is 24 paychecks a month. Now, normally these are two set dates on a semi-monthly, which could be like the 1st and the 15th, or, some people do the 7th or the 22nd. So usually you're cutting down 2 paychecks a month when it comes to that. When it's biweekly, of course, it's like every other Friday. So you're adding 2 extra paychecks a year. So therefore, you can give them more income. When it comes to a monthly person, we do have to be very careful with that, only because at the, like let's say a teacher, they get paid a month, but we're looking at either 10 months out of the year or 11 months out of the year. So when we are taking a look at that type of income, we need to make sure that we are actually multiplying their monthly income by the appropriate pay months and then dividing it by 12. So here we have a sample of a salary employee. Now, of course, when we got the verification of employment, because we definitely want to go ahead and do that if they have any type of bonuses or anything like that, because you are taking a look at here that you see an annual bonus. So you definitely want to be able to also give them those incomes. But when we take a look at a salary employee, we also want to double check their their salary hours. So a lot of the times they're working less hours, which is completely fine, but we're always going to multiply and double check their salary. I'm sorry, give me 1 second. We're going to double check their salary based on, of course, the pay stub. In this case, we see that they have a regular rate, right? We don't have an hourly rate. So that would lead us to believe that this person is a salary employee. So we are going to be taking a look at the period pay date. So we do see here that they were getting paid on the 1st. Now, in this case, if you take a look at here, we did go ahead and give them the multiplied it by 26, because when we verified with the pay stubs, we did know that it was a biweekly pay period, not a semi-monthly. Because, if you guys recall, I'm sorry. I am muting some people. Because if you guys recall, when we go ahead and go back to the pay structure, if it's biweekly, it's 26 periods, and semi-monthly, it's 24. So this is where you guys want to make sure that you're actually multiplying it by the correct amount of pay periods per month and then dividing it by 12. So I do have a calculation sample. This is a manual calculation. We do actually use an income calculator here. So if you guys are ever wanting to get that income calculation worksheet, we can definitely share that with you guys. We definitely want you guys to be playing around with it and getting to know your client's income to be able to utilize that for, for a guesstimated income, or, if you guys need any additional help, we're always here to help you guys. So in this case, what we did, the calculation sample was 4,293, which is right here, and we multiplied it by 26 pay periods. And again, how you would be able to know is this is why we will definitely be asking our clients for if they're getting paid weekly, we get 4 to 5 pay stubs. Bi-weekly 3, and semi-monthly, we get anywhere from 2 to 3 pay stubs. And monthly, you want to go 1 or 2 pay stubs, even though you do only need 1 month of pay stubs. You want to be able to compare your pay stubs. So this is why we are going to gather a little bit more information at the very beginning so that we can be able to calculate and take a look at your pay periods and all that, and be able to calculate correctly. So in this case here, of course, after we multiply by 26 pay periods, we see that she's making 111,633. You divide that by 12 and you're giving them that amount. Now, why we're doing all of this is because we want to always make sure that our year to date is actually matching as well. If this is off, in this case, 9,302.25 multiplied by 2.87 months, and I'll show you guys right now how we do that. Give me. Sorry about that. So when we do the 111,632 divided by 12, we're going to get the 9,302.25, and we're going to multiply that by the amount of months that they've received this income, right? So we want to also verify that our year to date is actually matching. Now, as you can tell, this is actually less. This is more that she's receiving. So that's a good thing. You know, if you have less, let's say this was backwards, it's such a small amount. It's only $400. So, you know, we would still want to question why, right? Maybe she got an 8 raise, something like that. Now, how do we end up calculating these months? And again, I can share this with you guys, but we do have a paid date decimal calendar. This is a great little calendar. I can also share this with you guys. I'm happy to. Is you're basically going to go with your month and your day. In this case, our month ends in March, day 27. So we're going to go to March 27th, and you're going to go at 2.87 months. So this makes it a much quicker for you to be multiplying and dividing, of course, your months when you're calculating income. You know, instead of, I mean, you can go ahead and do the 27 divided by whatever, you know, March has, what, 31 days, I believe, you know, divided by 31 and get your decimal, but this will give you the calculation how an underwriter is going to look at it. So again, March 27th, we have 2.87 months. So this is why we're dividing this monthly income to verify that our year-to-date income is actually matching based on her salary income. Anybody have any questions so far? Another way that we do take a look at this is, again, we do have this income calculator sheet. We will go ahead and put it in the income calculation sheet based on the W-2s that we've received, as well as the year to date on the pay stub and the biweekly salary, so that we can match. Now, as you can see here, she does have way more of a monthly average at 2.8 months, right? So we are going to find out why. Now, one of the biggest reasons why is we're going to see it's because we're giving her the total amount, right, of year to date. Now, because you can give your borrower holiday and vacation because they're still getting paid from that. That's still part of their regular pay. But we do see she has an annual bonus. So this is where you end up separating the income based on bonuses, commissions, overtime, anything like that will need to be separated so that you can be able to appropriately calculate the monthly income that you're going to be giving and how you're going to input it into your Encompass class. Yes, honey, I'm going to go ahead and go into teacher salaries in a tiny bit. So the way that we do this is we're going to order what is called a verification of employment. Verifications of employment are always very, very different. Some of them are going to be either through the work number, directly with the employer, anything like that, right? So as a lender, we're definitely going to be doing all that work internally for our loan officers. A lot of our loan officers do like to do it ahead of time. I'm one of them. I do want to do it ahead of time because I know that if I'm going to have any type of additional income, which will include overtime, bonuses, or any other, it's going to have to be averaged. FHA and conventional both have a separate guideline for that. With FHA, they're going to use your previous 2 years. They will not necessarily use your current year to date. So you definitely want to read that guideline for that. In conventional, a lot of the times it just depends on the situation, but we can use year to date. Most of the time, if it's more beneficial to the borrower, we're going to use the last previous 2 years, but we're definitely going to get into that when you're running DU or LP. Now, when it comes to FHA, they're going to use your previous 2 years. So in this case, if this file were to be FHA, we would be using any bonuses or any other income. We would only be using these 2 sections here. So we would add them both and divide them by 24. Why? Because you're using 12 months of each. When it comes to your salary, your bonuses, again, if this is conventional, you can use your current. If it's beneficial to the borrower to use the previous, you use your previous. You're always going to use your worst case scenario though. So since we've received now this verification of employment, this is where we saw that the borrower was getting paid bi-weekly and not semi-monthly. So the pay period frequency is always going to be on here. When we do the paper verifications of employment, which is not the work number, there is a section for them to place whether it's bi-weekly, hourly, annually, anything like that. And as you can tell, our calculation was correct at $111,633. We're just off by 8 cents. So if you take a look back here, when we did the math, we were off by 8 cents, but that's not, super, super crucial. So after we get our verification of employment, we want to go ahead and break down the same calculation on income calculator. Now we're separating our incomes. Again, the reason why we end up separating our incomes is because we do want to make sure that at the end of the day, we're actually giving the appropriate income for the appropriate type. So when it comes to overtime, bonuses, commissions, again, the guideline does read that it's normally for FHA previous 2 years. For conventional, if it's more beneficial for the borrower, you're going to go pretty much your worst case scenario. So the lowest of your average. The reason for that is because it's not always, anytime when it comes to commissions, bonuses, or any type of other income, it's not always going to be consistent unless they have some type of contract or something like that that states how the income is going to be on other or commission. The majority of us, especially being realtors or loan officers, we know their commissions are never always the same. So therefore, on here, what we went ahead and did is just to show that the bi-weekly and the annually actually match. We just broke it down both, right? We added both the annual and the bi-weekly, and we can see that it's consistent. We also broke down the last 2 years of salary income and the current. And as we can tell, her income has been increasing. Now, this one here is a huge jump, so you are going to want to know, even though this is 8,000, the jump here was so small that you want to know, here in this case, she did end up getting a much higher position, and which is why her jump was much higher from, 2020 to 2021. I'm sorry, from 2021 to 2022. Now we're going ahead and breaking down her bonus. As you can tell, when it comes down here, the average for 2020 was 1,030. For 2021 was 999.58. And 2022, she had a huge jump in commissions, right? I'm sorry, bonuses. So again, we cannot give her the current, although we would all love to give her, of course, the $2,200. The reason for that is because it's not a consistent number. So therefore, we have to go with a 2-year plus year-to-date average, because in this case, it is beneficial to the borrower. So here, our 2-year plus year-to-date average is $1,150.30. So we're going to go with the worst case scenario. And the calculator itself is actually going to give you use lowest of calculations. Do not include other. So therefore, it's going to tell you here what calculation it recommends for you to use. Again, you do want to go back to your DU or LP when you're running that. You do want to go back to your to your DU or an LP to see what conventional guideline it's giving you on regards to how to use your average. But when it comes to FHA, you're definitely going to use only your previous 2 years. So in this case, we would completely remove the current year to date and only average by the last 2 years, adding the 11,995. And I'm going to do that separately so I can tell you, and that at 12,365, and we would divide that by 24 months, which would give us a lower amount of $1,015. So here, as you can tell, we're now reducing it, quite a bit. I mean, in our case, it may not look like a lot, but if you are trying to really push income for your client, $135 a month is going to be a big difference. Why? Because you're only going to be using the previous 2 years and not the current that is much, much higher. So in this case, when you're doing a FHA file, just make sure you guys are using only previous 2 years because that is what the guideline does read. In this case, knowing of course that we are on December 6th, we're already pretty much at the end of the year. This is a case where you guys can work with your underwriter and let them know like, hey, we're at the end of the year. She's making way more income now. Can we try to push that? So we may be able to, we would have to just get exceptions for that. But of course, because we're at the end of the year, it makes it easier for you to be able to give them the year-to-date income so that they can have a lot more income on there, right? Because again, $135 a month may not seem like a lot to a lot of people, but when it comes to your income calculations and you're trying to push income, $135 a month can be a lot for your income calculations. So we went ahead and did the same thing here for your other income. And as you can tell, this is pretty consistent, but now your year-to-date is lower. So you're going, again, your income calculator is going to tell you to use your lowest income average, which is your year-to-date income, because it is $240 less than what it would be if you're using your previous 2 years. Again, with FHA, we are going to go with your previous 2 years, but with conventional or with this case scenario, with it being closer, to the end of the year, you might be able to, go with all 3 years. So you always want to try to play both scenarios and see, you can always come to me, which I work with our underwriter, and we can go ahead and help you out to see what's the best way we can push your income here. You also want to go ahead and verify your W-2s, because your W-2s do need to match. If you remember here, we are looking at 95,000, it's all broken down, right? But you want to look at your totals, 123 and 120. In this particular case, your W-2 is not really matching here, but if you take a look up here, it is matching. The other one you can't see it, but it was matching as well. And the reason for that is because there's non-taxable items on here, right? So they are removing certain items here that are not non-taxable, so therefore they don't have to file taxes on. So it's good to be able to have your W-2s to compare to, as well as your verification of employment, because then that way you can take a look at all these items and see where is the inconsistency, right? So in this case, we take a look at these inconsistencies, and then sometimes your underwriter might ask about it. Sometimes he may look at him and be able to see him and just be like, oh, you know what, it makes sense. So at least you know where the inconsistencies lie. So here again, we have non-taxable items that were not a part of your W-2, but it does not mean that we have to go off of that, because having your verification of employment is going to help you be able to get the appropriate incomes. So yes, Maria, so it is 2 years, but FHA will, the guideline does read previous 2 years. Conventional is a little bit more vague. So that's why we as underwriters kind of go case by case. So We're now going to move on to an hourly employee. So with an hourly employee, you also want to be very, very careful when you're giving your employees certain incomes. The reason for this is when you're reviewing an hourly employee's income, a lot of us, especially me when I was very new to this, I would just go with 40 hours, right? We always want to go with 40 hours because, we're just used to that, right? It's a 40-hour work week. Well, not necessarily. If you have a borrower who's working, let's say an example, 29 hours, 33 hours, 26 hours, 29 hours, just something like that, you're going to have to average their hours. You're going to have to gather their hours, and divide them by the pay periods that you've received, right? Let's say we get 3 pay periods because now we see an inconsistency of hours. If you have this type of inconsistency in hours, you're going to have to give them an average and calculate your income based on that average, especially because FHA is going to do that. So let's say an example here that I placed here on the side. Let's say you have a borrower that you got the last 3 pay checks and they have 29 hours, 33 hours, and 26 hours. You're going to divide, you add all 3 and divide by 3. Right, which is going to give you about a 29-hour average. So now you're going to get your hourly rate and multiply that by the 29 hours. Now, again, you're going to want to go ahead and still look at your year to date and see if that's consistent, which is where we go back to, in this case here, of course, I have the 27 hours. I'm sorry, $27 an hour at 40 hours, which this person gets paid weekly. And we could take a look at it here because our pay, of course, we have 7 days here on our pay start and end date. And so in reality, our pay date, as we can see that this is weekly, we know that they're getting paid weekly, right? So we're now going to multiply it by the weeks of the year, which is 52 weeks. And we're going to get 56,160, divide that by 12. This is what they make monthly based on our year to date. So our year to date is not going to be our pay date. Our year to date is always going to be our period end date. Why? Because this is the date that they ended up getting paid to. So in going back to our decimal, we always want to use that, the period end date, right? So March 12th, my period end date is 2.39 months. Now I'm going to multiply, this times the 2.39 months, and it's going to give me 11,185. As you guys can tell, it's a huge discrepancy here. 9,720 versus 11,185. This is where you guys want to question your borrower. So it's important for you guys to question your borrowers because at this point, they're going to need to tell you, they're going to need to tell you why, because this is a big difference. It's almost $2,000 difference. So you're going to need to ask why. So I have a case that I just ended up, getting a client a couple of days ago that he ended up signing up to the Army. And he was out of, unfortunately, his income was a little bit inconsistent. I saw that his previous year was 51,000. His current year was about 25,000, I believe. It's a huge drop. And we're in December. So I asked him what happened. And he said, well, I enlisted in the Army. So I was in the Army Reserves. And of course, they have to go through training and all that. Perfect. Now I know why. Why was, how, so now I'm going to find out the dates he was out of work so that I can be able to actually average my appropriate amount of months. So, in this case, let's say this person was out of work for 2 months. Would it make sense? Well, in this case, it wouldn't because they're making $46.80 a month, right? But let's say they were out for 2 weeks because they were sick. They were really, really sick because of COVID. So they were out for 2 weeks. Okay, so it would make sense why he made less income, right? Because it's almost $2,000 difference in the year to date versus what it should be. So you always want to make sure that these inconsistencies, you have a reason why, because this is a big, big difference. So, you always want to be double checking all that good stuff. Again, always double check your hours because at this point, you're going to have to go based on the average. So just imagine if this person was only working 29 hours at $27 an hour. Let's multiply that by 52 paychecks and divide that by 12. We are now looking at a difference of $3,393 a month if they were not doing their 40 hours versus $46.80. So this is why you guys want to make sure that they're consistent. Now, I've had clients that, let's say, they were weak, they were out. I'm sorry, they get paid a week, they were out for the week for some reason, a couple hours a week. So if their current pay stubs are starting to show 40 hours, just get their 40-hour pay stubs. You're much better, off doing that and having to just explain that they were out sick for some reason, they don't get paid sick days, something like that, so that you can be able to use your 40 hours. Because, the difference between the 46.80 and the 33.93 is, it's a lot of money. It's $1,200 that you're going to have to take away from the client a month, in income. And that's huge when you're trying to calculate income for a client. So far, does anybody have any questions? No? Okay. Another thing you want to take a look at too is your consistency, how, your hourly rate is consistent. The reason for this is you always want to give them their additional income. In this case, if you notice my inconsistency here, I was questioning, hey, you should be making you should have made 11,185.20 year to date. What happened? And he comes back and he says, hey, my bad. I'm sorry. I forgot to tell you. I got a pay raise. Well, guess what? When I got the previous paycheck, here's my story now. I'm able to show this to my underwriter and say, hey, the reason his year to date is lower is because he just got a pay raise last pay period, and he's now making $3 more an hour than he was previously. So now my story is more consistent, right? So because of the pay increase, I can definitely give him the $27 an hour, and my year to date is no longer a problem. So this is why it's important when you're analyzing your paychecks. Now, these paychecks are, they're a little bit easier to read. Once you guys get into County of Los Angeles paychecks, good luck. I'm just kidding. They're very all over the place. So this is where I definitely do recommend getting verifications of employments. County of LA paychecks, especially for the sheriffs, nurses, they do take anywhere from a week to 3 weeks sometimes to receive, but it's super important because the way that their checks work is they're all over the place. So it does become a bit of a hassle. So that's, I don't have a current sample right now. Let me check so I can kind of show you guys, but I'm going to move on for a second. In this case, when we received this client's verification of employment, we got pretty lucky. These were all verifications from the work number. I'm going to show you guys a sample of what I'm talking about when it's called a written one. But in this case, as you guys can tell, we did have a base salary, which in this case was his hourly, overtime, and other. So you do want to go back and double check what your others are. So a lot of this time, these clients, especially in this case, he is a fleet driver. So he drives a specific type of truck, right? He gets a bonus based on these trucks, and he also gets reimbursed expenses. Now, these are the type of items that you can give back to a borrower, but it must be consistent and it has to have a 2-year history. So in this case, this client had, a taxable fringe. He did have an expense reimbursement. So you do want to take a look at these types of incomes and make sure that you're able to give them back. How you can do that is, again, by taking a look at their verification of employment and making sure that they actually do have a 2-year history. So in this case, we do see here that it is coming, it is decreasing. So again, we do have to calculate based on the decrease. With FHA, they are going to definitely look at that. So you guys want to be careful with how you calculate with FHA. If you have any questions, again, we do have a scenario desk. So you can shoot an email to that scenario desk. I believe it is called scenarios@icorelending.com, but I'll double check for you guys. But it does break that down for you, and you want to make sure that you're giving them the worst case scenario. So now we're going ahead here and breaking it down for you guys on our income calculator. So basically, again, just the same. It's, $27 an hour, 40 hours. We're wanting to check the consistency of that income. The year-to-date income, it's pretty approximate, but remember, he just got a raise. So we do know that that inconsistency of that lower amount from year-to-date is because he just got a raise. And we do see it, always going up. His income's going up. So that's a good thing. Right. So in this case, of course, we're going to give him their hourly rate, the 40 hours. Although this income calculator is telling you to use the lowest of the incomes, when it comes to hourly employees, we're not going to average the hourly income if there isn't an inconsistency. And the reason for that is because he just got a raise. So we're always going to push for that raise, right? So in this case, even if your calculator is telling you to go to your average, you're going to go with your per hour because he just got a raise. And we have a verification of employment who is basically telling you his average work week pay period is going to be 40 hours at an hourly pay frequency. He's going to get paid weekly at $27 an hour. So this is, your another one of your strong tools that you're going to use for your income. Now we're gone ahead and broken down his overtime and his other income. So again, since the income is actually decreasing, we're going to go with the worst case scenario. Same thing with the overtime. We're going to always go with the worst case scenario. In this case, we were calculating for conventional, but if it's FHA, a lot of the times with overtime, again, it's just case by case. Just come to us and we'll help you just to make sure that with FHA, we're making sure we're giving you the correct income, or you're calculating the correct income, because FHA is super, super strict. Even though they're the easiest to qualify, they're a little bit stricter when it comes to income with overtime, bonuses, and other types of income. Any questions so far? Nothing yet? Let me check over here. Oops, sorry guys. What happened here? All right. Sorry, this thing. All right. So another thing that you always want to make sure, and we're getting towards the end of our income calculation, I am going to discuss other incomes really quickly, and I do want to show you a sample of another income that you're going to see. Again, pay stubs are always going to be very, very different. They're all going to look very, very different. Some of them are going to be super scattered with a lot of stuff. You definitely want to take a look at, when you're reviewing your pay stubs, make sure that the company name does match. We've had people give us pay stubs with, a certain name up here, but the W-2 says something different. Keep in mind, let's say McDonald's. Those are franchises, right? But they're actually owned by private parties. So when you're taking a look at somebody's pay stub from McDonald's, a lot of the times it's going to say like the Munoz LLC on your W-2. Why? Because it's privately owned by an actual party, but it's a franchise. So those type of things, you just want to make sure that they're matching. We had something like that previously. So we just had to basically, this is why we do run a 411 on the address and the company to make sure that it's consistent, right? But you do want to make sure that you see that. You make sure that your period beginning and ending dates are consistent. I have seen where somebody gets paid from, let's say, 3/14 to 4/2, but they get paid on 4/1. Well, maybe 4/2 lands on a Saturday, but they get paid Fridays. So that type of stuff, we've seen it, but just make sure that you guys are taking a look at that so that you can see that they're consistent. They do have to be valid for 30 underwriting days. What does that mean? Let's say we get into underwriting today, December 6th. Your pay period cannot be older than you want to make sure that you're consistent with your pay period. So they cannot be older than November 6th, but keep in mind, it does take us 30 days to close, right? So you want to make sure you're always getting and not always, of course, it can sometimes takes less, but you want to make sure that you're always making sure that your pay stubs are older than 30 underwriting days. So again, let's say we're December 6th, but we're going to close December 23rd. So then, we want to make sure that we're getting the most current pay stub that they have. Making sure your marital status is consistent. I've had people submitting pay periods where they're saying that they're single, but their pay stubs do read married. So we're, especially with FHA guys, if you're running a client's credit and they're married and not single, and the borrower is not coming on the loan, you still need to run the borrower's, the spouse's credit report and hit him with the liabilities. So make sure that if you are placing somebody as single, that everything is consistent. So if they're not single and their pay stub says married, trust me, we're going to catch that. So just make sure you guys are always taking a look at all the consistencies of everything when you're submitting in file. Verify that your borrower is in fact working a 40-hour work week. So again, making sure that the hours on your pay stubs, in this case, these pay stubs are a little bit different, but making sure your hours are actually consistent with your 40-hour work week, or we would be having to average either the year to date or the hourly amount. Make sure your borrower's name, social, and all that good stuff is consistent on your pay stub. I did have a case one time where I had a borrower who was an actual ITIN, and he gave me a W-2 with one social, a pay stub with another, and his taxes with an ITIN. So in this case, it's very common for an ITIN borrower, but in this case, we could not go with a social security number because that social security number did not belong to that borrower, right? So we also want to make sure that you guys are taking a look at that. And more importantly, you guys want to double check for any type of garnishments or child supports that are being deducted from your borrower's pay stub. The reason for that is because we are going to have to hit him with that liability. Now, a lot of the times these any type of garnishment or child support may show up on the credit report. As far as I last heard, I haven't followed up on that. These type of things are no longer going to be showing up in the credit report because of certain, let's say it's a medical, because of HIPAA, they're not going to put it on there. But you do want to double check their pay stubs. A lot of borrowers are not going to tell you, hey, I have child support, if they don't have like an agreement. But what if they do have an agreement and they're getting it garnished from their pay stubs? The one thing we do not hit is 401k. As you can tell here, she is contributing to her 401k. So a lot of people used to hit them with the loan if it was a loan. The reason why we don't hit them with the 401k is because they're borrowing against their own money. So therefore, they've already earned that money, right? So we cannot be trying, we're not going to be hitting them with that deduction from their pay stubs because they've borrowed off of their own money. So just make sure you guys are taking a look, and it usually comes down here under others or adjustments. So just make sure you guys are taking a look at that because it will say that it's some type of garnishment. Garnishments that you guys can find can be anywhere from like the franchise tax board. It can be any federal garnishment. So any federal debt will be garnished from pay stubs. It can be, of course, child support or from the IRS. So you will take a look at it. Normally, it's under your deductions. So you do want to make sure that you guys are taking a look at that. Now, I did want to go ahead and show you. So, honey, you asked me about when it comes to teacher salaries. Let's say somebody, and I'm going to pick the calculator up. I hope you guys can see that. So when it comes to teacher salaries, let's say a teacher gets paid either 10 or 11 months out of the year. How you would be able to tell is one of two ways. Your borrower needs to tell you. So if you get a client that's a teacher or works for any district, LAUSD, El Rancho, Downey Unified, anything like that, make sure you guys are asking them, how do you get paid? Is it 11 months out of the year, 10 months out of the year? Reason for that is because You have to, a lot of the times, and I made this mistake when I first started in the business. I'm like, well, wait, she makes $4,200 a month. Why can't we give her that? They're like, no, she makes $4,200 by 10 months. So she makes 42,000 a year. But what about the other 2 months? She's not making money. So therefore, we got to divide it by 12. So now she's not making $4,200 a month. She's now making $3,500 a month. So therefore, you guys want to make sure that you're taking a look at this income with your borrower. I've had borrowers that get an annual salary. Perfect. Then you just divide that by 12. Now, do be aware that there are borrowers that get that are teachers that do get bonuses based on the type of teacher they are. One of the biggest things that I've seen is whether they coach on the side. So I had a teacher who was also the volleyball coach. So she would get a stipend as well as an additional bonus for being the coach. So you can also give them that, but you also have to see how often does she get that? Well, it's only during the season. Let's say football season. You have to run what is it August to February? You have to see what months the season is, baseball season. What months does the season run, right? Well, even though the season may run from a certain month to month, they're actually starting practice, let's say in June. So she starts getting that bonus in June or July. So you want to get that information. How you get it through a verification of employment. So one of the ways that we go ahead and get the verification of employment is through the work number. So these and it's something internal that we request, but we also request verifications of employment through we have to go through the employer. And how you request that is you basically we have an actual form, and I'm going to download one right now so that I can share that with you guys. So this is our actual form. So as you can tell here, this is an internal form that we do as a verification of employment. And as I mentioned to you, this is going to actually break it down somewhat like the verification of employment that you guys saw here, right? This is a little bit more different, more like nicely, neatly typed up. This is actually an actual person who's going to come in and is a either human resources or something like that in the department that actually completes it. So they're going to go in, and this is where I mentioned to you, they're going to put the applicant's, employment date, what their position is. You want to definitely see the probability of continuing. They do need to let you know if the overtime and bonus is going to continue, because as you can see here, she does have that. If they put no on that, unfortunately, you cannot give them that income. So let's say you get an employee that makes overtime. But under the continuance, the employer marks no. So the unfortunate part of that is you cannot give them that income. The reason for that is because unfortunately they don't have a continuance. So they're not going to get it anymore. So even if they got it, you won't be able to give it to them. You want to take a look at, pay increases, all that good stuff when you're reviewing these types of verifications of employments. All this information is normally generated by our system when we input that information, so you don't need to complete that. But again, these are tools that we provide as a lender to be able to help you finalize your income calculation for your borrower. Now, I did want to show you guys just a little tiny pay stub that you guys are going to love. The reason I want to show you guys this pay stub is simply because, again, when it comes to pay stubs, they're come in all shapes and sizes, right? Look at this pay stub. And it's all over the place, right? You can definitely look here. It says gross income pay, but take a look at this pay stub. My gross income pay is much different. $6,020 versus $6,290. In this case, what was much easier for me was to go ahead and order a verification of employment for my borrower. Again, the sheriff's department, the health department, they take a lot longer, but this is where I was able to see what his salary was per pay period, semi-monthly. And then I was able to break down, this is not the most pretty one, but I was able to break down his income based on base, overtime, bonus, and he also got a flex amount. And there's also another. As long as, again, it's a consistent 2-year history, you're able to give him that income. So if you take a look here, I had my year to date for 2022, my previous, which is 2021 and 2020. So they're always going to break that down for you. And we of course go with these numbers here at the bottom, but then you can see the breakdown of what the income is. Does anybody have any questions? So anybody who wants to go ahead and get the income calculator and the my little cheat sheet on the pay period decimal, go ahead and shoot me an email. I'm going to put my email. Actually, I think you guys got my email for the invite, but I'm going to put my email here on the chat. Shoot me an email and I'm going to go ahead and send it out to you guys so that you guys can have that. It's a great tool to have. And again, pay stubs are all going to cut, like I said, in all shapes, forms, and sizes. So it's going to be very, you know, every single file is going to be very, very different. So I definitely recommend you guys, if you do have a question and you need some help, please don't hesitate to hit up the scenarios desk. Let me just double check that email for you guys. So yeah, it's called Scenario Desk, and I'll put that on here on the chat so that way you guys can go ahead and take advantage of getting not just an underwriter's perspective, but also, you know, your processing team that can help you in case you do have any questions when it comes to, you know, if you're questioning your income. You know, we want to be able to help you with that because it's not easy. Trust me, it took me some time to learn it. You know, I had to have, you know, I asked questions all the time. So please don't hesitate to, you know, give us a call. If you know, if the scenarios desk takes a little bit longer, just give me a call. I'm happy to help. Send me a message. Again, that scenarios desk does include our underwriter. So, you know, if he sees it, he's super, super helpful. He's more than happy to help you guys. Anybody have any questions? I want to be able to, so this was just basic income, guys. We do have other ones coming up, of course. We do have, you know, I definitely do all the classes here, trying to break them down the way that I like to learn, which is pretty much the step-by-step. Next week, we do have Schedule C and Schedule E. Schedule C is self-employed income, and Schedule E is your rental income. That was one of the ones that I loved learning. I don't know, I'm weird like that. But you know, you guys are welcome to join those. Yeah, again, if you guys have any questions, please let me know. I'm happy to answer them. No, don't be afraid, guys. I'm looking at the chat too if you don't want to unmute. All right, guys. Well, that was it for today. If you guys don't have any questions, please, please, please do not hesitate to shoot me an email asking me for the scenario, the items that you want. I will shoot them out for you. And then anybody who messaged me through the messages asking me for it, I'm going to shoot it over to you guys. I hope you guys liked it. And I look forward to sending you guys the next one. Thank you, guys. Have a good day.
Thank you. Thank you. Thank you.
Thank you.